Hello everyone, I'm going to start this real estate market update with 3 questions and give you 3 answers. So stay with me until the end. Are the property values up? Yes, they are. Are we seeing multiple offer situations more often again? Yes, we do. Is the inventory in Calgary very low? Yes, it is. Many are asking, could Calgary real estate pricing jump once again? Let me explain. The story in Calgary's real estate today is one of the low inventory. In other words, the total homes on a market available to buy. It is not one focused on sales. And make sure you stick to the very end. No update is complete without understanding what this all means in terms of your money. So as I write this, the Calgary real estate market has 2,750 homes for sale. When you look into this graph, you will immediately see what this actually means. This represents one of the lowest homes available to purchase that we have ever seen and the lowest numbers since 2006. For the further context, in February we listed 2,389 homes, that is 60% less than 4,651 homes that we listed last year February. As well, from January to February 2022, the total new net homes that appeared on the market grew by about 1,000. This was very helpful in serving the high amount of buyer demand we have had. This year from January to February, we only saw a net new amount of about 400 homes. That is historically very low gain, and that's why we are sitting down where the red line indicates the rock bottom number of places to buy. Let's break things down a little further. Detached homes, our biggest part of the market, has 60% drop in new properties coming to market, resulting in 24% less than the last year. Semi-detached, 50% drop in the new properties coming to market, leaving us with 90% less than the last year. Row homes, 48% with 39% fewer homes active on the market. Well, apartment market has been acting differently for quite some time. As the most affordable part of the market and the one which most Calgarians and new Calgarians can afford, it is seeing the same amount of new properties come to market as the last year. Well, you might wonder, why is that? Well, because it is the price point applied to the greater number of people in this new higher interest rate environment. So the confidence and the demand remain high in this segment. Overall, we have 90% fewer homes to purchase than at the same time last year. So, with all this being said, does our region have an inventory problem? Well, depends which side of the coin you are sitting on. If you are a buyer right now, then yes, inventory is a problem. You will have to act very fast to get the home that you want, and if the home is priced fairly, you'll be paying at least the asking price. But this is not a bad thing. It is simply what it costs to get home in a greater Calgary today, with nothing but upside on a horizon for housing values. If you're a seller right now, the inventory shortage is in your favor. If you're going to the market or considering getting into, you remain in the driver's seat. Now, this doesn't mean you can pick your price, not at all. This is a big difference between this year and the last year. Despite the pace and the continuing demand, in the today's high interest rate world, almost nobody is overpaying anymore. They're simply paying fair prices at a speedy pace. If you price it as much as 5% too high, you could be completely overlooked in all price points and all property types. So sellers, don't get too greedy and you'll be rewarded. Okay. We start with the inventory because it is the most important story, but now let's talk about the sales just for a little bit. Market data generally compares current statistics to the previous year, like year-over-year thing, but with 2022 being what I call unicorn year, I'm not going to do that. Instead, I will compare how we are currently doing to our most recent history. And check this graph below, which shows February stacked up in relation to the last 10 years of Februaries. What does this red line telling us? Sales are pretty darn good, aren't they? Well, headlines today will say we are down 47% from the last year, but this was still one of the best Februaries of all times despite the interest rates, despite the economic slowdown. Now, this chart does not tell the full story either, not by the long shot, but what does it show is that overall demand is not a problem here. The story that continues to unfold is the adjustment in where the sales are focused. The detached still has the highest volume of sales, but percentage of sales have shifted greatly. In 2022, the February looked like this. 57% detached, 70% apartments, 16% row homes, and 8% semi-detached. Well, this year, 46% detached, 28 apartments, 18 row homes, and 8% semi-detached. The big difference is the portion the two lowest price property types are taking in the terms of the whole market, 46% in 2023 versus only 30% in 2022. This is a drastic shift towards affordable options. Row homes and apartments are the stars of the market and expect this to continue all year long. Now, check out this graph. You will see that 80% of the sales have been in Calgary. There has been a shift as well with these statistics. As the month goes on, we have seen total sales of our surrounding communities continue to shrink. Personally, this 80% of the market share for Calgary is as high as I have ever seen. So what does this mean? Well, as we shift to affordability, it is Calgary that has the largest amount of apartments and row homes for sale. Historically, the satellite cities have been built out to give people more bang for a buck and more square footage for the dollar. So they have a larger percentage of single-family homes within their communities. So since we have had pushed for more affordable options, Calgary is getting a larger and larger proportion of sales. Anything to worry about? Well, not at all. It is keeping a single-family homes tight outside of Calgary because Calgarians who seek that increased size and want to maintain affordability continue to migrate and take residence in those regions as well. Okay, now let's talk about money and housing values. For the second month in a row, we have seen our benchmark sales price increase. Year to date, we are up about $12,000 across the board. In terms of percentage, we are climbed 2.5%. And all this in a year where many were questioning and forecasting to crash? Okay, now let me be clear about one thing though. This does not have us yet reclaim all of the time highs of $546K we hit in May 2022, but since we are coming into a spring market, we are already starting to build this momentum. It is not long before we do. But as we did before, let's get a little bit deeper. If you recall, in the earlier parts of this update, we saw that row home and apartment segments are really what is driving the market. So you will likely expect to see that they are performing better in terms of the housing price growth, and you're right. Apartments year over year are up on the average by 11%. Well, some districts in a city as high as 19 and the lowest being around 9. Monthly, they are seeing price growth on average of about 3%. That's a great news for apartment owners in Calgary right now. Row homes year over year have seen a 9% jump in their values and 2.3% month over month. Again, an amazing stat. Both of those price types are acting contrary to my earlier statement about us not yet reclaiming our peak sales prices, because those two segments have now surpassed last year's top prices and show no signs of slowdown. From here, it gets much more modest as we talk about single-family homes and semi-detached segments. They both sit year-over-year price growth of about 2.5%, and they're still chasing the last year highs. The price growth in our satellite region is also happening in these similar ranges. The Adri is flat year-over-year, Cochrane 2.5% price growth, and Okotoks 3.5% price growth. Again, since those communities are not driven right now by apartments and row homes sales growth, they aren't seeing in the same year-over-year price growth figures. Okay, I started the update with a question. Could Calgary prices jump up again? What do you think? Supply and demand rules the world, and supply and demand rules our real estate. It's no different. When we revisit this sales graph showing second best sales month ever and compare it to the second graph, the absolute lowest amount of properties to buy, it doesn't take an economist to point out that we have making of another very positive real estate year ahead of us. I can easily see the year drive our benchmark average sales price over 10% growth once again, similar to the years of 2013 and 2014. Certainly, we should expect this in a row home and apartment segment. They have nowhere to go but up. And here is the kicker. We can afford it. We are really the only place in Canada that they can. Our housing affordability index is the best in the nation, and it would take years and years and years of double-digit prices increases to put that in jeopardy. Thank you for staying with me until the very end. I appreciate it. And if you're wondering how all these changes in the market affect your situation, whether you're buying or selling, please don't hesitate to reach out. Have a great March.